What's up, guys? Welcome back to the Alpha Cave. It's been a while. I feel like I find myself saying that all the time because we don't make videos often, but I'm gonna try to be more consistent with these investing videos. I've been lazy with this ever since this virus hit. I've been lazy with the videos, but we'll be back soon. Before we get started with this video, I just want to say that I hope everybody's safe in these crazy times right now. First of all, with the virus, and then second of all with these protests. Some of them aren't too friendly, so I just hope everybody's safe out there. Protest peacefully, do your thing, but stay safe. All right, getting back to the video. Today's topic is the top 5 mistakes that new investors make. Sometimes even experienced investors make these mistakes. The first one, and the one I found myself committing the most often, is chasing a stock. And what I mean by chasing a stock is, Robinhood especially, it shows you the hot stocks of the day. So it shows you the stocks that have risen the most throughout that day. So what I would do is I would say, well, this one seems to be going up today, let me buy it. But what often happened was, by the time Robinhood decides to show you that company, how much it's gained during that day, it's already too late. That's the reason they're showing it to you, because it's already made so much gains. So by the time I would buy it, either it would level off or it would go back down to its normal price. So I would end up losing money a lot of the time. Chasing a stock really never worked for me. There was very few times where I would look at stocks and see like, this one's had a great day today, let me jump on the train, and it would continue to go up. There was very few times where I actually made profit chasing a stock. So that's why the first one on the list I had to put was chasing stocks, because that's the one I did the most, and that's the one that I saw that lost me the most money. Trust me, by the time Robinhood or any of those investing apps decides to show you how well a company is doing that day, they've probably already had a huge rise in their price for that day that it's very hard for them to continue rising. Something probably happened, they got good news, and either they're gonna end up leveling off that day, or they're gonna come back down to earth and you're gonna end up losing money because you bought in too late. To go along with that one, sometimes the opposite is also true. Sometimes, you buy on the dip and the dip just keeps on dipping. So just because a company has a big, huge drop in price and it's a good, reputable company, doesn't mean that it's gonna come back up right away. Trust me, I've made that mistake also. Like in the company for Halliburton, typically it was around 50 some dollars, from when I started researching it. And then it took a huge hit to around $30. So I was like, right now is a good time to buy in. So I bought in at around $30, thinking it's gonna go back up to the 50s, and it just kept on dipping. I think recently it's gone all the way down to about $7. So buying in on the dip without doing research is also a huge mistake. Right now, Halliburton's barely back up to about the $13 mark, so it's slowly rising back up. But then again, it's also been a few years that I've held on to these. So number one, chasing a stock or buying on the dip without doing research. I don't always buy on the dip, but when I do, it keeps on dipping. Moving on to number two. Number two is also a really common mistake, the lack of patience. People wanna just be checking their portfolios every day, seeing their progress, buying, selling, buying, selling. Sometimes the best returns come on stocks that you're patient with, stocks that you have over the long term. Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. Reading that quote has basically been the only reason that I've held on to that Halliburton stock for so long. It's been like a year and a half since I bought that first big group of Halliburton shares, and it's just been dipping ever since. But I decided to be patient. My average price right now is $19.48, and over this past year, it's reached a low of about $5.05, which was terrible for me. But it's already back up to $13.20, and it just seems to be climbing. Over the past month, it just seems to be climbing. So that's a good sign. Hopefully comes back up, and I'll just get rid of them by that time. But I'm just gonna be patient with that company because I've always believed in oil, but recently it's been tough for the oil industry. So my advice number 2, be patient with your shares. Don't give up on them so soon. As long as you did your research at the beginning, you should be fine. Number 3, investing on emotions. Now, I'm sure everybody's done it. The stock market can get emotional. Some days you're up, some days you're down, emotionally as well as financially. But don't do it. Investing emotionally can cause you to make some decisions that you might regret. You know, you might have lost a lot of money and you're like, you know what, I'm gonna put it on this stock and I'm gonna get it all back. It's not gambling. Investing should not be gambling. You shouldn't, you know, you should cut your losses when you have them, and you shouldn't invest out of emotion. You need to make sure that every investment you make has been properly researched and you know the company well. You don't have to know it in and out. You have to know the basics of the company, and you have to believe in the product or the service that it's trying to sell. You have to analyze financials and look at how the company's done in the past. Look at the outlook for the future. Do you think the company has a bright future? But every investment you make has to be thought out and studied well. You cannot invest on emotions because you're angry that you lost money, or you know, you want to be really risky because, you know, I'm up anyway, I'm playing with house money. There's no need for that because it's not house money. When you make that money, it's your money. You're not investing with house money. The gains you make are your gains. So even if you are up, you don't want to say, I'm up anyway, let me just invest in this company. You need to research every investment properly. Don't be stupid. Number 4, my favorite one, listening to the experts. Now you might tell yourself, well, these dudes know what they're doing, they know what they're talking about. They do the research for me. That's what I used to tell myself, you know, they do the research, so I might just trust them. They don't know your goals. They don't know your individual goals. They don't know if you're a short-term investor. They don't know if you're a long-term investor. They don't know how much risk you want to put into it. They don't know your goals. They can tell you a company is going to do well in the future. They can tell you, you know, anything, but they don't know your individual goals. They cannot set up your portfolio without knowing your individual goals. So listening to the experts might come back to harm. Another thing about listening to the experts is that there always seems to be, you know, there's never a consensus between experts. You know, some experts can tell you one thing and then others can tell you the opposite of that. So which experts are you going to listen to? You know, both experts have historically performed well. One tells you this company has a bright future. One tells you this company doesn't have a good future. You know, so there's always experts on opposite sides. Experts on opposite sides. That's why I suggest you do your own research. 1, because they don't know your goals, and 2, because which experts are correct anyway. There's experts on this side, there's experts on this side. So which ones are you gonna listen to? Gary Vee? So my suggestion, don't listen to the experts because there really is no experts. We've seen these top hedge fund managers perform like crap. You know, so nobody really knows what's gonna happen in the stock market. Do your own research, be responsible for your own portfolio. If you think you're not educated enough to make your own decisions, educate yourself. There's a lot of educational tools for free on YouTube, and then there's these courses you can pay for also. So there's a lot of tools you can use to educate yourself up until the point where you feel comfortable making your own decisions. But don't listen to the experts. And the last one, number 5, kind of touching on that last one, make sure that your investment strategy matches your goal. What is your goal? Identify your goal. Is it short-term? Is it long-term? Can you be risky with this money? Do you have to be more conservative with this money? Identify your goal and then formulate a strategy that accommodates it. I see many times people say they're investing for their future, for the long term, but then I see them day trading every single day just because a stock goes up or down. If you're investing for your future, you need to understand the stocks that you buy, you're gonna hold because you believe in those companies in the long term. You're not a day trader. If you're a short-term investor, you wanna make a quick buck, then I understand you day trading on the up, you know, if it goes down, whatever. But if you need to make sure that your strategy matches your goal. For me, for example, I want to invest for the long term. I want profits for my future. So I'm not day trading stocks every day. I used to, because I wasn't following this rule. It's a mistake I made. That's why I made this list. I used to day trade, but I was investing for the future, and I found myself just going lower and lower and lower. So that didn't work for me. So I bought some companies, some of these bigger companies that I believe in, and I replaced all those other companies in my portfolio that were like trends, you know, the cannabis stocks. Those are gonna do well, but for me, I need something that's a sure thing, a sure lock for the future. Of course, making a quick buck never hurts, right? But that's not my goal. So I don't get too excited on the days where I make $1,000. I don't get too down the days where I lose $1,000. My goal is for years to come. It's not for tomorrow. It's not for the next week. Identify your personal goal. What is your goal? Once you have your goal, then it's going to be easy to identify a strategy that can help you reach that goal. All right, guys, that's enough advice from me today. Those are 5 mistakes I made. Avoid those mistakes, especially if you're a beginner. Avoid those mistakes, and you'll have some success in the stock market. Also, forgot to mention, maybe I did mention that, but if you're interested and you don't have a Robinhood account yet, click the first link down below, make yourself an account. And the reason I'm promoting it is because you click that link and make an account, I get 1 free share, you get 1 free share, and you never know what company you can get. Might even get Apple, Microsoft, you never know. So use that link if you haven't already made your account. You don't have to deposit money to get your free stock. So just use that link, make your account, guys. Stay safe, be careful. See y'all.